Is a 401k really the best way to save for retirement, or have we given it too much credit? Conventional wisdom says to invest in your 401k as soon as possible, especially if your employer offers a matching contribution. Yet there's a growing debate that a 401k might not be the ultimate retirement vehicle it's made out to be. For starters, the fees can sneak up on you. Many 401k plans come with a range of management fees and fund expense ratios that chip away at your returns. Over the decades, these expenses can translate into tens of thousands of dollars in lost potential growth. If you're not aware of these costs or fail to pick low-fee options, your nest egg might be smaller than you expect. Another criticism is the lack of flexibility. Sure, you can borrow from your 401k, but you'll generally face strict repayment rules, and if you leave your job, you might have to pay it back immediately or face taxes and penalties. Early withdrawals also come with hefty penalties. Contrast this with a Roth IRA, which can offer tax-free growth and withdrawals, or a taxable brokerage account, where your money is more accessible if emergencies strike. There's also the question of investment selection. Many 401k plans offer a limited menu of funds, sometimes heavily favoring the plan sponsor's own funds. This could be fine if they're broad market, low-fee index funds, but if they're actively managed with high fees, you could be locked into mediocre returns. Proponents of the 401k argue that the tax-deferred growth and employer match outweigh these drawbacks. After all, a match is essentially free money, and your contributions might come right off your paycheck before taxes, reducing your taxable income in the short term. Still, there are alternatives. A Roth IRA allows you to pay taxes upfront and then withdraw your money tax-free in retirement, which can be beneficial if you anticipate being in a higher tax bracket later on. Taxable brokerage accounts also offer more investment choices and no penalties for early withdrawals, though you'll pay capital gains taxes on your profits. Some people even diversify across multiple accounts, putting enough into a 401k to get the full employer match, then contributing to a Roth IRA or brokerage account for greater flexibility. So, is a 401k truly overrated? It depends on your financial goals, your plan's fees, and whether you value flexibility over short-term tax breaks. If your plan offers low-cost funds and a generous match, it can still be a powerful tool. But if you're forced into high-fee funds or know you'll need your money before retirement age, you might want to reconsider. Ultimately, the best retirement strategy is the one that aligns with your risk tolerance, timeline, and overall financial plan, whether that includes a 401k, a Roth IRA, a brokerage account, or all three.